Hello, I'm going to do a quick trade recap on a pound yen trade I traded this morning and took profit essentially at the FOMC announcement with the FOMC announcement reaction. So last night, well, I guess first things first, it's no surprise to anyone who trades this pair that we are in a massive kind of wedge pattern here, just kind of roughly drawing that in. A massive wedge pattern, and we're still kind of haven't made a decision one direction or another, depending on how you draw this wedge. If you're precise with it and draw it like this, we are consolidating underneath it. So if that's a true breakout, who knows? But yeah, so pretty big wedge we're in here on GJ. I expect there's some I think there's some interest rate decisions for pound pairs tonight, like monetary policy, official bank rate, tomorrow morning at 8 a.m. So who knows? That may be the driving force to kick this sucker out of this wedge. And I'm going to be pretty excited when it happens. Um, so we'll have to see. But anyways, to the trade at hand. Last night, I don't know if this was Brexit talk or what, but we had this pretty crazy little spike up last night up to this level that has, um, you know, just kind of roughly drawn this in here. Has been tested 7 or 8 times, 6 or 7 times. Let's see, 3, 6, 7 if you count this little spot since breaking below this point here. So we spiked up last night, got a pretty nice rejection away from it, and I had drawn a trend line. Let's see, how did I draw that? Kind of like this. Incorporating this more recent price action. And you can see, actually that's not how I drew it. I just did it from right here. From that impulse move down to this first little wick here. You can see we haven't really had a legitimate close above this trend line since its inception. A couple little consolidation closes above it. We had that random little news candle last night that spiked up, and I guess technically if you draw it like this, closed above it, but it was quickly rejected back and kicked back down below the trend line, almost in the next hour or two after any close above it. So I was looking at that as a potential entry point, that trend line, if we could get a retrace back up this morning up to that level. And on the 15-minute chart, 15 and 30-minute charts, during my top-down analysis, after that large news spike up or whatever it was, up into this little level there, we just traded sideways for, like 3 hours. Just up and down, and, just a really tight, 20 pip range for 3 hours. So I saw this, like, I don't know what you technically call it, if you want to call it order absorption, or what, but I saw that all those orders being absorbed there, just kind of consolidating back and forth, and then a pretty decent strong move away from it. So I had that little general level around there, and then just kind of average all that together there. I had this little shelf of support that was broken. If you just kind of look at the got a couple of wicks past it. If you want to be more precise, you can draw it like that. Whoops. can draw it kind of on these lower wicks there. So we had that little shelf of support there that was broken. We have our main trend line here from like the 4-hour chart. I'll fatten that up a little bit and change the color. Yeah. And then I also kind of just drew this little super minor potential trend line there on this 15-minute chart. I didn't really incorporate this spike up because it kind of looks, I don't know, like a fake candle to me, a little fake out or news spike or whatever. So it's kind of, I try to incorporate legitimate price action, and to me that kind of seems artificial. This large spike candle up. So once we settled down here and made these, this potential trend line here, I drew that in. In addition, we had this little potential channel top wedge formation here forming this morning. And right around our main trend line and this little shelf of support that was broken was all those little intersecting trend lines on our wedge top. And fib wise, just to kind of impulse fib this little impulse leg here, right up around there was that the 61.8 and the negative, or the 78.6 fib retracement, just for this little impulse move out away from this consolidation area. So I was looking for a potential trading opportunity or a potential shorting opportunity there. And on its way up to these levels, I did see some hesitation. If you look at the 2 hourly candles preceding it, we got decent little wicks to the upside, and as they were progressing, the pop down. I don't know the words, but the rejection from this general area was becoming more and more apparent. You could see it, the spike up and down as price was coming up into this little 61.8 area were getting more noticeable, I guess you could say. So I was just waiting for just a quick spike up into these little areas to get short. And I entered on the first test of those that general intersecting point there. This blue line was my entry point, 140.15. Could have got a little bit better entry, but I think that was about 5 pips of drawdown I took, which wasn't bad for GJ. Stop, my typical 30 pips. And once we kind of started getting a decent move away here, I was looking for targets. This negative 23.6 was kind of my primary target. And that kind of lined up nicely with, if I scrunch this up here, kind of this little trend line here that was potentially forming. Excuse me. It was just above that trend line, and I felt like if we were to get some selling momentum with the FOMC announcement, that we would at least tag that, because these can be pretty price moving announcements. So that was my first and initial target, well, kind of my only target. Well, I guess we had the bottom trend line here, as well as a negative 61.8, which is where I ended up taking profit manually, because my take profit order was jumped. So stop wise, I had my 30 pip stop initially, and then once we got kind of below this little spot here, I noticed this kind of little support and resistance level here. You know, once we broke down out of this little consolidation area, we retested this general area here and had a rejection away from it again. And then the second time we came up, we had some resistance there as well. So once we got some closes below that, this little level as well here. Once we got a close below this 139.90 level, essentially 89.90, and I saw these two 15-minute candles fail to get much above it, I tightened up my stop really tight, just above essentially just above these candles essentially, in the event that this was going to take off to the upside. So I don't ever open any new trades right before a news announcement in anticipation of the market moving one direction or another, because you know that's just gambling. I will leave a trade open if I'm already decently in profit. I was up about 30 pips at this time. I actually closed another trade I was in for just about 6 pips because it hadn't really gotten much movement on that, and that was pretty much, that was too close to my entry price for me to kind of feel comfortable leaving that open. So I closed that for about 6 pips of profit, but that was right before the announcement. And during these news announcements, I always have my little order ticket open, and you know, my finger on the close button, ready to exit it for a profit or for a loss. You know, because you can't always rely on these stops, these limit orders to get filled. Just in the case of my take profit order, I had it right just a hair above this negative 23.6 at 139.50, and it completely ignored it and blew past it and tagged this negative 61.8, and that's where I exited it manually. If you drop down to the 1-minute chart, you can just see the volatility in that candle and how, you know, large it is compared to the other 1-minute candles. So that was our news announcement. We didn't really get any upward movement, which was nice because I actually anticipated, you know, I really had like a 10 pip stop on this at the time. And not that my stop likely would have been acknowledged anyway. It probably would have jumped above it and I would have had to exit it manually, but I was ready to do that. But we just got a quick, nice, beautiful spike down right through the negative 23.6 and right through that trend line and right smack dab to that negative 61.8, which was also the low, at the most recent low at the time, just right around in here. So that's where I exited. I wasn't going to hold out for anything else. And you can see just as fast as we spiked down, we spiked back up 63 pips, you know, in a matter of minutes. You know, it's 13 minutes. It retraced all the way back up to essentially where where price was when the news announcement came out. So that's why I exited. That's where I exited, and a little bit of the analysis behind it, why I was in the trade in the first place and why I didn't exit before. And you really have to just essentially accept the risk of you know, one of these candles going against you. I'm up good for the week, so I was willing to manually close this trade out if it, you know, spiked up against me for a loss. So if you have any questions, let me know.